Welcome to my YouTube channel. I am Wisdom, your host. If you're seeing this is a forex video dedicated basically for forex education. If you're here, it simply means you want to learn about forex. And today I'll be talking about liquidity. So without further ado, let's get to it. Um, Basically, liquidity is all about understanding what drives the market, what fuels the market. So I'm going to be using this simple example to explain what liquidity means. If you're not a beginner trader, you know what an uptrend means. If you have an uptrend, a higher high, higher low, a higher low, higher high, higher low, and you have something like this on your chart, this is an uptrend. So for liquidity, sometimes you find the market coming down to give what looks like a break of structure and something like this. And inexperienced traders would want to enter from this point, assuming that this point is a change of character, marking this point to be a change of character. But oftentimes what you find the market doing is that it ends up continuing to this point. Sometimes it will even respect the zone and still stop them out. That is because in this trade, there is no liquidity. Liquidity has to be there for confirmation. Nothing is 100%, but you need to look for liquidity. So you need to look for liquidity. There is no liquidity. So I'm going to show you what liquidity means. First of all, you're not supposed to be trading against the trend except you have multiple confirmations like liquidity and change of character. So that means that this setup is wrong. What you then want to do is to look at an uptrend and you look at the origin of the trend. If you find a point of interest at this point, where a point of interest simply means where you have a fair value gap and another block. So assuming that this is our other block, we want to look out for liquidity. And what is liquidity? Liquidity simply means incomplete pullbacks. For here, this is an incomplete pullback. It failed to return to the point of origin, the point of interest. This also is an incomplete pullback, makes it liquidity. This also is an incomplete pullback. That makes it liquidity, right? So in order for our chart not to be messy, we're going to delete all this from the scratch. We're going to delete all this and we're going to summarize all the liquidity that we have here. So basically for me, I'll summarize everything to be this and I'll label it liquidity. So this is liquidity. And liquidity simply means incomplete pullback. So for you to track the liquidity, you then have to wait for a return when the price returns back to the point of origin, the point of interest. Sometimes you'd go like this, you find the trade coming back to the point of interest and then giving you, sometimes gives you a confirmation like this before going higher and to take profit. So this is what the market looks like. So, and sometimes when it gives you the double confirmation, it gives you a smaller stop loss, and your entry will be at this point, and your stop loss will be here, and you target this zone. So for me, this is what liquidity simply means. So liquidity rather is a point of origin housing multiple incomplete pullbacks. Liquidity is a point of origin that houses multiple incomplete pullback. That is, it tries to punish impatient traders, people who got in at this point too early. They are following the trend buy setup. It tries to come back and take them out because this point here is an incomplete pullback. People, the buyers, the early buyers, it tries to take them out and also return to its point of origin to fulfill and balance the market because there's assumed to be an imbalance at this point here. There's assumed to be an imbalance at this point here, and there's another board block at this point here. So without further ado, let's get to it. Let me give you a detailed example of what it looks like on the chart. let's get to the chart. Let's see what it looks like. Let's see what it looks like. This is a chart on the 15 minutes time frame for Nasdaq. So this is a chart on the 15 minutes time frame. Here you can see I don't want to go down to 5 minutes because I don't want to distort the chart. But this is NAS 100, and for what we can see here, that there is incomplete pullback, one, second incomplete pullback, two, and in summary, we would summarize everything to be liquidity. This is it. And we saw that this is liquidity. And we can see clearly that price came back here, tapped into it, and continued. Now, in view of that, right, since we missed this entry, let's look for another entry using our just giving example. From the recent example that we just gave, you can see that this trend from here, higher high, higher low, and higher high. So from this trend, we can see that the point of origin is this guy here. This guy, sorry, this guy here. This is the point of origin. So I would delete that and draw it on my chart. Right? Let me mark out the point of origin. Delete this guy. Okay. So we mark out our POI. This is the POI, point of interest. We highlight it, and let's look at, there are other points of interest like this guy as well, and like that. But like this is an incomplete pullback already. This is an incomplete pullback from here, an incomplete pullback, and this guy is also an incomplete pullback. This guy here is also an incomplete pullback. So in summary, we're going to categorize all the incomplete pullback as liquidity, just like you see here. Simple. And that is liquidity. So with that, we want to see what will happen. For me, I would place my trade at this point. I'll place my buy orders at this point and target the swing high. I usually like to target 1:10, but let's see how this trade turns out. See how it turns out, and I'll wait for the market to play out and tag me in. So let's get to it. Let's play the market and let's see what happens. Okay. So wait for it to come in and tap us in. You see, it taps in and it was a sniper entry. As you can see, it's straightforward to our TP. It's even going higher. So just like we noticed that when you're able to spot out liquidity, it helps you to manage stress in your trading. If you entered here at this point, you wouldn't have gone far before the market stopped you out. So that if you had entered at this point, if you had entered here, you would have seen initial profit. That's why some of you complain that you see profit initially and then it ends up stopping you out. So you see that. So in order to avoid that, you need to mark out your liquidity zones properly. So for me, this is a very clean setup, and I hope you got value from this. For now, I think I'd have to stop here. If you have questions and you have things you want to ask and you don't understand about this video, you can express yourself in the comment section and let me know more about what you want me to make clarifications on. So I guess I've explained liquidity concept in a very simple way. And for now, I would have to draw the curtains here. I hope to bring more videos to you guys later on. Thanks for watching. Do like and subscribe. If you find value in this video, you can share. I'd appreciate that, as it helps the algorithm to recommend my videos to people like you who are looking for forex information. Thanks for now.